Okay, now we're recording. Hi everyone, it's PK here, and you've got Samir here with me. Say hello, Samir.
Hi, PK.
Oh, not to me, but to everyone else.
Hi,
Anyway,
PK, and everyone else watching.
all right, so I'm really grateful, Samir, for making the time. So in this video, we're going to be going through the 2 deals that Samir has executed since he joined the Property Investment Accelerator. When did you join? Was it March, April, February?
Yeah, so I tried to do it like the beginning of 2020. So I reached out to you in January.
Yeah.
And I remember at the time you're still busy, and we had to schedule something for February. So it's kicked off in February.
I see. Got it. Yeah, so like Samir has actually got some amazing results. So I think you've got 2 properties since you started. Um, the first one close, like in New South Wales, sort of around that Newcastle area, positive cash flow, off market, under market value, I think, if I'm not mistaken. You can go into the details in more detail. And since that time, and then the best thing is since that time, it's gone up. I don't think you've got it formally valued, but the median value in that suburb has gone up like 50,000 or more than that, or something like that. You can talk about it. So that's pretty amazing. And then the best thing about it is that you've actually gone to your next property in Adelaide, which once again, that one wasn't off market, right? That was on market.
Yeah, that's
So
right.
positive cash flow, growth suburb based on all the data. Was that one under market value as well?
According to the bank valuation, yes, but
Yeah,
looking at the market, I'd say it would have been just at market
just
value. It
at
was
market
slightly
value.
under, yeah.
Yeah, cool. So I think, just to introduce Samir a little bit as well, one of the best things I like about Samir is that, like, obviously he's humble and all that kind of thing, but he's so focused. Like, I've had so many clients, and I always find that the best ones are the ones that ignore the noise, just follow the system, follow the data because it works. And Samir has done that. He's got the results, and he's getting the results, and he's already looking for the 3rd property. So I just wanted to take this opportunity for those of you who are watching to allow Samir to kind of walk you through his journey, and hopefully inspire you, hopefully educate you, and really help you on your own property journey for the next 15 minutes or 20 minutes, or let's see how long this goes. So once again, thanks
Sure.
for coming on, Samir. Maybe just, kick things off if you can. What was your property investment experience before you joined the Property Investment Accelerator?
So, like we covered, I joined the Property Investment Accelerator course in February this year, 2020. So before that, I'm 28 now, so about 5 years ago, I started saving up. I had a bit of money left from over the years that I built for a deposit for a place. So I was really wanting to get into real estate. And I've seen my parents do it, and I just thought I wanted to get into the market. So I was 23 at the time, and living in Sydney, with all these apartment blocks going up, things like that. I started looking in the area where I was actually living. So very typical to what some of you may resonate to. So I picked up a off the plan apartment, pretty much in the same suburb as where I live, and yeah, paid a 5% deposit, I think it was at the time, and a couple of years later it was built, and yeah, that was my first investment property. And then after that, I obviously wanted to, build a property portfolio. I like real estate, I enjoy it, and I want to create some long-term wealth for myself and for my family in the future. So I started doing a bit of research. I read a few books, and then you sort of end up getting analysis paralysis because there's so much information out there, and it's not what you've got out there, it's how you use the information and put it to use, because you might find something out there that tells you one particular factor about a property and what to look out for. For example, it might say invest in an area where there's low vacancies, because you'll always find a tenant. But what about anything else? What about, other factors like, so I ended up, I thought I'll just search on Facebook. So actually a friend of mine recommended, why don't you join Facebook groups and bounce some ideas off people that are in the same position as you, someone who's, at a position where you want to be, and you can sort of leverage off the information of real people. So I joined that, and I joined PK's group early this year, and that was that's where I started sort of purchasing more properties after the course. So that's how I got to where I started with PK.
Yeah, cool. And like people have the option, and there's 101 courses out there on real estate, all the way from very useful to not very useful at all the way from $20,000 to $200. There's a lot of options out there, and of course, many people try to do it themselves. There's so many books, podcasts, forums, Facebook groups. Why did you, if I can sort of just be blunt, why did you spend thousands of dollars on my course, the Property Investment Accelerator? Why not just use all those resources and do it yourself?
Yeah, so I think the other avenues that I looked at was I attended a couple of workshops in a hotel environment that really gear you up and really get your eyes open and what you can achieve, and at the end that sort of send you to the back to purchase a book or a CD or a course or a one-on-one mentorship sort of thing. But the vibe that I get from those is they're really there to make a profit on a large scale. And I don't know, I mean, I wouldn't want to just give my money away to a corporation that's, I just didn't feel it right in the gut. So I looked at other avenues, and I was following a couple of buyers agents online. They sometimes give out tips and things like that, and go down the path of buyer's agency and engaging one of those guys. But then the property that I bought in my local area, the apartment, when I was doing the loan for it, the mortgage specialist advised me that, if you want to build a portfolio, the one way that I can recommend to you, and that still rings in my head, is educate yourself, because you're going to pay someone to find the property for you. But tomorrow or a year later, 2 years later, you want to buy something else, you know nothing about property, and you're putting your hard-earned money, and you're basically, creating wealth from an avenue where you don't have much interest in, you don't know much about. And there's so many moving parts in property. So I think the best way I can put it to words is invest in yourself, and the knowledge will pay off. So when I joined the Facebook group, obviously PK was doing a few videos, I think at the time, and a few posts, and I thought, you know what, I'll have a chat to PK. Let's just see where this goes. And just from speaking to PK and just seeing where he's coming from and what he has achieved and how he wants to, share that knowledge and teach other people and make a difference in people's lives, really resonated with me. And without a doubt, I just signed up because, I really felt the feeling there with PK. So it wasn't a sales thing he was trying to do, but he was genuinely trying to help someone understand and, have the knowledge to build, go forward in real estate.
Yeah, awesome. I'm very grateful you did. And looking back, like there's some people who, everyone's different. There's no sort of right way to do it, but some people buy 5 properties in a year. Some people buy 1 property in the first year after doing the course. You bought 2 properties, and you're looking for your 3rd within the 12 months of doing the course. The big question that everyone always has is, how do you actually find where to buy and what to buy? So can you explain, I guess, for the benefit of everyone, you know, how you went about it, and, you know, from learning the content in the course.
Yeah, so the course is set up in sort of structures on you know, finding the right suburb, finding the right property, things like that. So I guess the big question that people ask me is, where do I invest? What about this suburb? What about this suburb? You know, there's a new train station coming here. You know, they're going to build something on this side of the fence, and you know, this will be a good area to invest in this part of the suburb. But I think what the course teaches you is how to invest by using data. So looking at data factors, there's around 35 different data factors that the course sort of goes through. The course tells you obviously what they are, but also how important they are and how they resonate with each other. So I guess when you sort of understand those factors and you learn them, this is all knowledge. So you do the course and you gain all this knowledge, and the course teaches you how to put it together. So the data doesn't actually come from one source. There's a few different data sources that are pulled together, but it's nothing too complex. I mean, there's no guesswork or anything like that. Just relying on the data, and the data has sort of a reliability factor as well. So how accurate it is. So you can really put confidence into that. And if there's an instance where you find something and you think, oh, this is too good to be true, right? So that sometimes could happen to someone looking at one data source. You can just search on Google for that same factor. For example, if you're looking at something simple like vacancy rates, you can search another website that has the vacancy rate for an area. And you can rely on multiple different data sources if you really need to. But I guess once you get over that, you will you feel the confidence in the data, and analyzing data to look at it will really help you find the right suburb. I guess, you know, I don't want to give too much away at the same time as well. Yeah, but you know, it's all in the data is all I can say.
Yeah, yeah. No, fair enough. And that's, you know, that's what we sort of shout from the rooftops as well. Data, data, data. Regardless if you do the course or not, data is where it's at. Look, I think a lot of people would be inspired by your story because, you know, like you're 28,
Yeah.
3 properties, thousands of dollars in passive income. And of course, it's not like you're at 6 figures, but that takes time. That's a journey. And your first property's got equity, which you use. Your second property within 6 months has got, you know, let's say more than $50,000 of equity. The third property is going to get there in a few months. The one that you bought in Adelaide, you're looking for your fourth property. So look, you're actually, you know, I think statistically in the top, I can't remember the exact number, but maybe the top 5% of property investors already, right? And just a very normal person, just like me, right? I mean, putting the course to the side, forgetting about the course, what would you say to people in their sort of mid 20s or early 20s, or even people in their 30s, you know, husband and wife with a couple of young kids that want to really start, you know, property investing, that might have 0 properties, might have 1 property. How did they get into the position that you're in? And, you know, put the course to the side, you know, what is the kind of heartfelt inspiration or kind of guidance that you can give them?
Yeah, well, the guidance that I can sort of share is, if you've decided you want to invest in property, so that's a whole different area itself. I personally like investing in property because it's something tangible. I can see it, I can touch it. You know, I know it's not going to disappear overnight. Yeah, so I guess for someone that's young, so for my age, you know, or anyone else, I suppose, you know, people save money and keep money in the bank, and you know what happens, peak everything with savers. So it's always I always suggest that you invest your money in some sort of area or field. So with property, for example, I think you know, in the last 35 years, the average property prices across Australia have gone up, I think on average about 7% year on year. And if you have, you know, $40,000 in savings, and if you put that down on a property, you know, invest in real estate, then it's really going to pay off in the long term. And you know, who's going to benefit in the long term? It's you're going to be 10 years looking down the track thinking, I'm so glad I did that. And you're going to enjoy the efforts that you put in and the money that you put aside to invest, and it's going to pay off in the long run. I mean, the great thing is, you know, with the course, it doesn't only teach you how to find high growth areas or high growth properties in the short term. So it's also passive income. So you'll have that in the future years. So someone with a family, I think it's not about just building wealth, but it's also gives you that freedom in the future. You know, you don't want to be looking back at it and thinking, oh, I wish I invested back then. And, you know, I would have been so much better off. I could be working part-time and so on. You know, it just gives you so much freedom and so many opportunities in the future. And it just releases any sort of financial burden, because you know that you've put your money to good use, and your money is working for you at the end of the day in the long term. And you know, compound interest, compound growth can, yeah, it just goes from there.
Yeah, no, it makes sense. It's so important to think about your future now. And like normally what I say is, with a passive strategy, it's get rich slow. It's not a get rich quick scheme. But in order to get rich slow, you need capital growth fast, right? And that's the way that you can buy multiple properties. So it's kind of like counterintuitive. You need to get rich slow, you know, 10, 15 years to get that sort of, you know, retirable income. But for that, you need to get growth, not after 10 years, but now. So you can recycle that debt, go again. I mean, exactly like you're doing, again and again and again.
Yeah, that's exactly right. I mean, with compound growth, so if you find a place that's going to grow, you know, in the short term, so say 1 to 3 years, if you think about it, so if you've got a $500,000 property that's gone to 600,000 the first 3 years, on the fourth year that you're getting growth on the 600,000 on top of the extra 100,000 you've made, and that's year on year. But yes, if you invest in an area that's growing, and you know it's going to be safe, because properties, I feel it's a low risk investment, especially in Australia. If you find something 500,000, 10 years down the track, it's maybe let's not look 10 years, but say 3 years down the track, it's only 525. On the fourth year, you're only getting the growth on the 525, and who knows what the growth rate is for that particular suburb. So each market, each suburb is its own market in Australia. So
yeah,
you know, there's over 15,000 suburbs, and there's a data for, you know, a high percentage of those properties. High percentage of those suburbs.
Yeah.
So yeah, that's right. So
yeah. And so let's you know, I think what people probably want to do is sort of deep dive on your Newcastle purchase. Now, of course, like you've just said, it's not a case of just buying anywhere in Newcastle. In fact, you had no affinity towards Newcastle. It was just where the data led you to a particular suburb. So like I mentioned at the start, this property, I think, what was the purchase price, if you don't mind sharing, or just ballpark?
Yeah, so the purchase price was 550,000.
550,000. And I think that was basically at the suburb median, and that suburb median has now increased to between 600 and 650, you know, like 5, 6, 7 months down the track. So the growth is already there, you know, exactly what you're talking about. The growth is there. The yield was, what was the yield on purchase, if you even remember?
Yeah, it was roughly it was around 5%. It was just under 5%.
Just under 5%.
About 4.9, I think it was. Yeah.
4.9. So on today's interest rates, I mean, interest rates were a little bit higher when you bought it, but even on then, it's positive cash flow. I think even before depreciation, it might have just snuck in. So that's great, and you got it off market. You know, I think there was an 11th hour bid where it kind of proved that you got it not only off market but under market, because someone actually bid higher than you, but you already got it by then, which is actually pretty cool. to hear. So, I mean, on the face of it, it kind of seems like that sort of holy grail, everything sort of lining up, low maintenance, brick and tile, I think, so it's very easy for us to talk about it at a high level, but to try to give some value to people, like what are I haven't asked you this before, so feel free to take some time to think, but what are the three things that you would attribute that successful purchase to? Like, what can people learn from your experience and go off and do? I mean, regardless if they do the course, but what can they just really learn from that experience and implement?
Yeah, I guess when you live, well, I live in Sydney, so I know some of the areas, suburbs around where I live, and I know them quite well because I've lived in this area for over 10 years, maybe even 15 years or so. I guess there's, like I said, there's 15,000 suburbs in Australia, so you don't know what's happening in another city, interstate. There's different markets out there. The demand of properties in the area that you live in is completely different to the demand of properties in another state or another city. Like, so Newcastle is a couple of hours away from me, so I didn't have to drive up there to have a look around the area. The data sort of takes you there, and if you really want to make the trip, you can. And there's confidence in the data as well. The data's, it's solid. It's a binary number. So it really, you can put your confidence to the data. And when I actually ended up going to Newcastle just before settlement, just to have a look at it. Obviously, like with my purchase in Adelaide, I didn't do that. I didn't even need to do that for the Newcastle place, but because I did the course and it was a very exciting moment, so I just thought I'll go check it out. I guess when you go to the area, I could just tell that this area it's really nice. Even I felt like living in there myself. But what you don't realize when you visit areas is how many properties are there for sale. What's the rental market like? Is there a lot of land around the area that potentially someone could come tomorrow and have a stretch of road and build 10 houses down there? Because development will suppress, I guess, growth. There's a lot of factors that the data, sort of the course will go through, and they all have very high, meaning and difference that they can make. So I guess I can tell you, I can talk a little bit about this purchase. So I was looking in this area for about a couple of months. Now, the reason it took so long is because this area is actually got quite a high demand. So there's not a lot of properties that pop up. I didn't want to go down the route of buying off market because I thought I'm sure something will pop up and I'll pick it up. But I found a property that I liked, and I even put an offer on it. And they did the open home and everything, and they had, I don't know how many, maybe 10 or so, or even more, groups of families and individuals that sort of came and had a look and had a lot of interest in the property. And after the first open home, it was sold, and it was well over $50,000 out of my price. Obviously, I bid below the suburbs median. So say if it was 550, I think I bid around 525 because it was first offer as well. But it sold for almost 600K, and that's a 3-bedroom place that sold for just under 600K. And a couple other properties, 3-bedroom, popped up. They weren't exactly what I wanted, but they also sold for just under 600K, both of them. So then I thought, oh my God, I won't be able to get into this market because I have to really keep on waiting. I might be third month in. So I started contacting, agents in the area that sort of that have the sort of reviews and ratings in the area of selling properties. So I had good conversations with about 3 or 4 different agents. And I only spoke to them maybe once or twice. So one agent really hooked on, and he was really working for me. So it was a Friday. I was at work, just doing my own thing, and I get a call. Hey mate, I've got a property coming up. I haven't put it to the market. Is it something you'll be interested in? And with property, because this day and age, you can sort of Google the address and you know what it's got, you know what's around it. You don't need to wait for a brochure, or you don't need all that marketing. And I liked it. I looked at it and it ticked the boxes the criteria that I had. And then I spoke to the agent and I said, hey, this is my offer X. This is how much I'm willing to pay for this.
Yeah.
And he said, mate, I've got like 7 or 8 people register already. And because they sort of did like a pre, what do they call it when they just reach out to other potential sellers? Sorry, other potential buyers. So maybe someone like me or someone in their books that was looking for a house, or they had existing clients.
Right.
And 8 people registered to come and have a look. It was a Wednesday night. I couldn't go up there, and he wouldn't accept my offer because why not? There's 8 other people that are interested.
Yeah.
So people went through it. They looked at it, and he came back to me. He told me he's got an offer for a lot higher than what I put forward, and they're going to go to the market next week. And I said, oh damn, I'm going to miss out. But he said the offer that someone gave was, they don't even have a pre-approval, so it's going to take some time. And yeah, so what happened was I slightly increased my offer, basically to the limit that I had set, slightly under it actually. And that property never went to market. And I ended up getting it at that 550 mark. I think the three or four properties, similar size, similar style, have sold for just under 600K now. The Suburb's trending over 600K. The median house price, I think one sold for 610. Like, it's just going up, and that's the beauty in the data. The data speaks for itself. I can't recommend it enough.
It's sweet to hear. When you hear someone, like, it's one thing to kind of say that as kind of like a salesy thing, but when I hear you say it, it's sweet to hear. Like, I bought it at what was it, 550 or something, and it's like those same properties are going 600 plus. It's 6 months. It's been 6 months.
Yeah, that's right. So, the course. There's a section in the course around negotiation, and you won't believe it. So after I put that offer, it got accepted. After I got the building in Pest, I even negotiated further on that. So I got a couple more grand off. There was just very small things, cosmetic things that, because I think it costs like $4,000 just to go on realestate.com and advertise your property, and it takes time, photos and cleaning the place, and it's not something that can happen overnight. So it's a couple $1,000 wasn't much for the vendor, so it worked in my favor. I mean, had I not done the course and I was in the same position, I wouldn't have negotiated. My solicitor said there's no point negotiating, these things don't happen, but you live and learn. So that's the knowledge that you get out of the course. And I guess the reason it took me so long to purchase a property, I guess, like I said, I did the course in February. This purchase this is now December, so it was 6 months ago or so. The reason it took a few months, obviously I was trying to find off market, but also that I released some equity as well. So so that's sort of helped me put a deposit forward as well. It's really good.
That's really good to hear, because sometimes people think that buying off-market properties either can't be done, because why on earth would a selling agent not list it? Like, surely they're shooting themselves in the foot if they give it to someone off-market, but there are legitimate reasons why they will do that. And like you said, selling costs on real estate, hassle, there's so many reasons why an agent wouldn't want to list it. And tapping into those agents, tapping into the right properties in the right areas, you're basically becoming your own buyer's agent. So, sometimes also people say that you need to be on the ground, you need to really understand the market, you really need to, go to the local cafe, smell the coffee, talk to the local hairdresser, all these types of things. But it's really not, it's not necessary. You can achieve everything. And here's my son. So you can achieve all of that without necessarily going there. You can get the same result by talking to the data, reading the data, and also you can get the same result by making friends, you know, not through time commitment, but strategic connections with agents. And they will do the work for you, like you've just done, and you don't need a buyer's agent to achieve those outcomes.
Yeah.
Um,
And I'm pleased to say that the property hasn't been vacant at all after settlement. Had a tenant move in, and I saved on marketing costs because the agent actually had a list of potential renters that, you know, people wanted to find a property, and they did that, I guess, off market as well. So I didn't have to pay for that, and I didn't have any vacancy on the property. So it was a win-win situation. I mean, the data doesn't speak just on the property side purchasing, but also afterwards keeping it, because property is what's bringing that income, the rental income. So the data really looks at, say, vacancy rates. They're very important. You know, how many, what's the owner occupied versus renter proportion, and how that, you know, how that plays into effect. But it goes on and on. So
the historical
yeah,
growth of rents
it's
and all
great.
that stuff.
Yeah, it was a great successful purchase.
Okay, well, I'm glad to hear it. And just to kind of finish off, is there something that you would say to someone who's kind of, you know, like, to do a property education course in Australia requires a bit of a leap of faith because there's so many people offering something. It's hard to trust who's right, who's wrong. You know, people think that you need to go to a buyer's agent, especially if you're lacking confidence. You think that, no, I can't, even if I do a course, I don't trust myself. What to speak
Yeah.
of the other person, I don't trust myself to actually do it. What would you say to people who are lacking confidence and really, you know, sort of chronically paralyzed by analysis?
Yeah, I'd say a couple of things. So one thing I would say is, if someone's giving you advice, if someone's getting you to sign up to something, just understand where they're coming from, who they are, what do they have, why are they recommending you to do a course, for example. Do they have a property portfolio that you want to build? You know, there's a lot of salespeople. You talk to them about properties, they only project to that one area, what they are selling, um, but they don't have a property themselves, or they know about property but not to that depth. So one I would say is, who is giving you the advice? Just be mindful of that. The second thing I would say is, whoever's giving you, you know, producing a course for you or selling you something, what are they getting out of it? Or if they're helping you, what are they getting out of it? That's the second thing I would say, because um, you know, after I did the course, someone reached out to me, like a financial planning sort of firm, like an investment, and they specialize in real estate, and they're
Okay.
similar to a buyer's agent, right? So, and I said, I'm not really keen on paying $15,000, and they said, hang on a minute, we don't have $15,000 fees. We don't like other buyer's agents. We work for you. And I'm like, how do you make your money? And they said, you just pay us a few $100s to sign up, and you're on our books, and we will work on a strategy for you. We'll, you know, find you the place that meets your goals
Yeah.
and all that. And I still didn't get it, because how are these guys in the business? How are they making money? And I said, can you give me a client example? And you won't believe it, PK, the examples that they gave me were all new buildings, which is not a bad thing. You know, everyone has their own goals, but I guess what where they were making their money were selling you off the plan home and land packages, and the builder would pay them a commission.
Yeah.
The builder would pay them, I don't know how much, 10,000, 20,000, 30, who knows.
Yeah.
And that's how they make the money. So I guess you're only limited to, so always be mindful of who is giving you the advice and what are they getting out of it. That's my biggest thing. Yeah, that's right.
Yeah.
So, because in that case, you're only limited to purchasing whoever's their builder. You can't
Yeah.
purchase somewhere where their builder doesn't build.
Yeah.
Yeah.
No, 100%. That's really solid advice. So, education is always the most important thing, but you have to be careful who or where you go for that education. And, you know, don't just sell yourself or buy a specific strategy. Try to understand everything, right? Try to understand different property strategies, and see what works for you. And If you can't do that with reliability, then that's where someone can step in, someone who's independent, someone who isn't going to get a kickback from a developer and is just there to help you because they've done it, they've achieved what you want to achieve.
Exactly. Yeah.
I'm super grateful that you signed up. I'm going to stop hitting record. We can continue chatting,
Sure.
but yeah, once again, thanks for signing up, Samir. And like the more important thing is, you've actually got results. And for me, making some money is great, but there's nothing like, it kind of seems
Yeah.
cheesy, but I actually get a kick out of when I hear results, because
Yeah.
that's
Look,
why I do this.
I'll end on a note that property isn't something that you can just buy every day. It's something that you really got to think about where you're putting your money. It's a lot of money you sort of put forward, and I can say that if you buy a property, and if you buy the wrong property, it can set you back many years.
Yeah.
And the right way to start is buying the foundation properties and building on those, because anyone can go out there and buy a property like I did. I bought a unit. It hasn't done bad, but there's certainly definitely better opportunities out there.
Yeah. Yeah. Awesome. Well, thanks for your time. And if you've watched this video and you've been inspired by what Samir has said, or you have questions or comments or clarification, something that makes sense, or you'd want one of us to deep dive, just comment below. And then I'm putting words in Samir's mouth, but he'll help or I'll help. One of us will help.
Sure.
And we'll keep it. Don't DM us. Just keep it in the comments, and we'll just see if we can help you in the comments, or if you have any questions or anything at all. Once again, thank you, Samir, for making time.
Thanks, PK. Thanks, everyone. Bye.